For centuries, London has stood as the unrivaled center of global finance, a city where fortunes were built, global markets were shaped, and the very rules of commerce were written. The City of London, known as the Square Mile, was once the embodiment of stability, innovation, and power, drawing international capital and top talent into its vibrant financial ecosystem. However, in recent years, that illustrious financial edge has steadily eroded. Today, London finds itself grappling with a myriad of challenges that have slowly chipped away at its dominance, leaving many to ask, what went wrong? How did a city that once defined global finance begin to lose its luster? And what does this mean for its future? London's storied financial legacy began in the 17th and 18th centuries, when the foundations of modern banking were laid. With the establishment of institutions like the Bank of England in 1694 and the rapid growth of the London Stock Exchange, the city became the epicenter of international trade and investment. Over the centuries, London's financial institutions thrived, bolstered by a combination of historical advantage, legal frameworks, and a reputation for transparency and stability. The city's success attracted investors and businesses from around the world, solidifying its position as the global financial hub. Yet, in recent times, a convergence of factors, both external and internal, has undermined this long-standing supremacy. One of the most transformative events in recent history was the Brexit referendum in 2016. The decision of the United Kingdom to leave the European Union sent shockwaves throughout the financial sector. For decades, London had enjoyed unfettered access to the EU's single market, which allowed its banks and financial firms to operate seamlessly across national borders. The loss of passporting rights, a privilege that once enabled firms to conduct business throughout Europe without additional regulatory burdens, forced many major financial institutions to reconsider their European strategies. In the wake of Brexit, a significant number of companies began relocating operations to cities like Paris, Frankfurt, and Amsterdam. This migration of capital and talent has not only diluted London's historical concentration of financial power, but has also signaled a broader realignment of where global financial activities are now taking place. Brexit, however, is only one piece of the puzzle. London is also facing a growing burden from domestic regulatory pressures. In an effort to safeguard consumers and ensure market integrity, the UK government has implemented a complex web of regulations that, while well-intentioned, have inadvertently stifled business agility. Compliance costs have soared, and navigating the bureaucratic maze has become a significant drain on resources. Financial institutions, once celebrated for their dynamic and risk-taking spirit, now find themselves bogged down by red tape. This regulatory overload has forced companies to explore more business-friendly environments abroad, further eroding London's competitive advantage. Adding to the challenge is the skyrocketing cost of living. London's allure as a cosmopolitan metropolis is now shadowed by its reputation as one of the world's most expensive cities. The cost of housing has reached astronomical levels, with property prices and rental rates far exceeding those of other major financial centers. For young professionals and skilled workers, the very lifeblood of any dynamic economy, the high cost of living is a major deterrent. Many talented individuals are opting for remote work or migrating to cities with a more balanced cost-to-benefit ratio, resulting in a gradual talent drain that further weakens London's financial clout. The real estate market, once a source of pride for London, now poses significant challenges. Exorbitant rents and property prices not only strain individual budgets, but also raise the cost of doing business. Companies are compelled to seek cheaper alternatives, often relocating entire departments or offices to other European cities where overhead costs are more manageable. This exodus affects not only the operational capabilities of financial institutions, but also diminishes the vibrant concentration of expertise and innovation that London was famous for. Technological disruption is another critical factor in London's decline. The rise of fintech, blockchain, and decentralized finance has revolutionized the financial industry on a global scale. While London was once at the cutting edge of financial innovation, many of its legacy institutions have struggled to adapt to the rapid digital transformation. In contrast, regions such as Silicon Valley and several Asian financial centers have embraced these changes, establishing themselves as hubs of innovation and efficiency. London's slower pace in adopting new technologies has made it harder for the city to compete in a world where digital agility is increasingly essential for success. Geopolitical uncertainties also weigh heavily on London's prospects. Global trade disputes, shifting alliances, and economic sanctions have created an environment of instability that makes long-term planning difficult for businesses and investors alike. With Brexit compounding these uncertainties and the UK's political landscape remaining volatile, international investors have become more cautious, diversifying their assets away from what they perceive as a risk-prone market. This trend of de-risking has contributed to the gradual exodus of capital from London, weakening its standing as the premier destination for global finance. Political instability at home further compounds these issues. Frequent changes in government, coupled with inconsistent policy directions and ongoing debates over the future of the UK's economic strategy, have led to a climate of uncertainty that undermines investor confidence. Without a clear long-term vision, businesses are reluctant to commit significant resources to London, opting instead for markets where political and economic strategies are more predictable and supportive of growth. Amid these challenges, the shift in global financial power has been stark. New financial centers are emerging in regions that are better positioned to adapt to technological change, regulatory innovation, and demographic shifts. Cities such as Frankfurt, Amsterdam, and even emerging hubs in Asia are actively courting international capital, offering lower costs, modern infrastructure, and more flexible regulatory environments. These competing centers are not only attracting investment that once flowed into London, but are also nurturing new forms of financial innovation that London struggles to match. Yet, despite the formidable challenges, London is not without its strengths. The city still boasts world-class educational institutions, a rich pool of financial expertise, and a historical legacy that continues to command respect. The London Stock Exchange remains one of the most influential markets in the world, and many of the city's financial professionals are still regarded as global leaders in their fields. However, these inherent strengths must now contend with an array of internal pressures and external competitive forces that threaten to overshadow them. To reclaim its lost edge, London must embrace a multi-pronged strategy that addresses these deep-rooted challenges head-on. Streamlining regulatory processes is imperative. Reducing the bureaucratic burden on businesses could lower operational costs and restore some of the flexibility that once made London attractive. At the same time, measures to curb the astronomical cost of living, such as investments in affordable housing and improved public services, are essential to retain and attract the young talent that drives innovation and growth. Furthermore, the city must accelerate its adoption of digital technologies by fostering a more dynamic fintech ecosystem and encouraging collaboration between traditional financial institutions and new technology startups. Policymakers must also prioritize creating a stable and predictable political environment. Clear and consistent economic strategies, free from the disruptions of frequent political upheaval, are vital to restoring investor confidence. By providing a robust framework for growth, London can begin to reverse the trends that have led to the gradual outflow of capital and talent. In the broader context, London's challenges serve as a cautionary tale for other global financial centers. No city can rest on its laurels indefinitely. Continued success requires constant adaptation to changing global conditions. The rise of competing financial hubs in Europe, Asia, and beyond underscores the importance of innovation, flexibility, and strategic foresight in maintaining economic dominance. London's story is not one of inevitable decline, but of a need for reinvention, a call for the city to evolve in order to meet the demands of the 21st century. Ultimately, the future of London's financial edge hinges on its ability to adapt to these multifaceted challenges. If the city can implement effective reforms, modernize its infrastructure, and create an environment that fosters both traditional finance and cutting-edge innovation, there is hope that it can reclaim some of its former glory. However, if the current trends continue unchecked, London risks becoming a cautionary example of how even the most storied financial centers can falter when they fail to evolve. Thank you for joining us in this in-depth exploration of why London is losing its financial edge. If you found this analysis insightful, please like, subscribe, and share your thoughts in the comments below. We invite you to join the conversation. What do you believe are the key steps London must take to regain its dominance in global finance? Stay tuned for more comprehensive analyses of economic trends and the forces that shape our financial world.